In fact, Ron first told us about the company's potential back in 2014.
The opportunity here is not for them to do 35,000 cars on the way to 50 or 100,000. The market is for 100 million cars a year. Like maybe they could do in 8 or 10 years, they could do 1 million or 2 million cars a year, but the potential, they could do 10 million cars a year in 15 years. So the potential is enormous.
If you think about what happened this quarter, right? If you take out the credit sales, they lost about $66 million excluding credit sales. But if you also adjust for Elon Musk's stock-based comp, that's a one-time charge as well. So credit sales one time, Elon Musk stock comp one time. So if you adjust for both of those items, they did about 10 cents in earnings this most recent quarter. So if you annualize that, that's 40 cents. At $450, that means this stock is trading at over 1,000 times on a P to E basis.
We invested in it between 2014 and 2016. We invested $300 million, $320 million for 1.6 million shares. At that time, it's now 8 million shares, 5-for-1 split. So it's $40 a share, as you said. And the stock's now 400 or 420. And when we invested, and I was on your program, I was talking about how I believe we would make 20 times our money over 10 or 15 years.
Price to earnings basis. No stock in any technology exchange is trading at that level. What that means is investors are saying they're going to grow earnings every year on an annualized basis at CAGR at 1,000%. But if you take a step back and look at what's happening in Europe, year to date through the third quarter, European EV sales.
And so far, in the first 4 or 5 years that we've owned it, the stock went up and down like a yo-yo, and that would be expected because what they were doing is they were building facilities, hiring people, coming up with design. It's a reasonable thing to bet against them. All these car companies, 50 of them have failed, and this guy somehow had made it through sheer willpower and raised capital. Now,
excluding Tesla, are up 106%. However, Tesla's European EV sales are down 14%. So the market up 106, Tesla down 14. So not only are they losing share, but they're seeing their sales decline.
He has 50,000 employees, and he has factories he's building on 3. I want to get to Tesla too, and I want to answer your news question. But Tesla is now building on 3 different continents, building in the United States, building in China, building in Germany, and you should expect more factories to be built continuously over the next 10 years. And last year they did. Okay, I'm sorry.
China, essentially their sales have stayed flat since May at about 11,000 cars, and now they're shipping cars made in China to Europe because there's not enough demand. That was supposed to be their growth market. So you have 46 new EVs coming next year. So we think that they're going to have problems, seeing the growth, and they're trading at a very high growth multiple.
Gordon, let me just play out the.
Well, what we worry about are not stock prices. When we're an investor in a business, we worry about the business. And the short term, I can't have any clue about what's going to happen. I do think that it's now a $400 billion market cap. It was $40 billion when we started. I've said for a long time, I thought it was going to be $1 to $2 trillion. With what developments have taken place recently, I think $2 trillion is the right number. So I think it's 5 times from here. Made 10 times in the past 2 or 3 years, but for 4 years before that, the stock didn't change, and the business grew tenfold. So the business went from $2.8 billion to $30 billion 10 times. The stock price didn't change. Now the stock price just caught up to. Now what's happening? This is just catch up. Now this year, Tesla is going to do somewhere around $32 billion of revenues, and I guess that they're going to do $100 billion of revenues within 4 years. And I think they have potential for $1 trillion of revenues within 10 years. So basically, you're looking at the very start of what's going to happen with Tesla. This could be one of the largest companies in the whole world.
Who thinks that?
All right, so I just want to be clear. Again, roughly all of their credit sales are to FIA or FCA. FCA has stated they're going to spend about 800 million euros through 2023 over the next 3 years. Tesla has essentially recognized all of that revenue already. We only think there's about 500 million left. So next year, they're not going to have the credit sales they have right now. They're not going to do 400 million in credit sales, right? They guided last quarter that they were going to do about 200 million in credit sales this quarter, Q3. They did about 400 million.
Where they were. Now I think that the business is going to go from 30 or 35 billion in sales, grow 50% a year. I think they're going to be doing 5 or 6 or 7 or 800 million dollars in sales in 10 years on just the cars. And the batteries is another unbelievable business, which I'm very excited about. And I think that with that kind of valuation, with that kind of results, you're going to see a 5 times appreciation. I was thinking 3 to 5 times. We made 10 times so far, 3 to 5 times to come in the next 10 years. Two more doubles, maybe 3 more doubles in 10 years. Is what the expectation is.
And this isn't cash-based credit sales. This is credit sales they're pulling forward from future years. You can see their receivables are up by a similar amount. With respect to them being a bunch of different businesses, look at their energy division. Revenues are up roughly $200 million, but so is cost of goods sold. So you didn't have any increase in gross profit. Their R&D spend is not increasing as a percent of revenue. It's dropping as a percent of revenue. So the point is, we think that next year, we think they're going to go back into structural losses. And, every single question, the only question that should have been asked on their earnings call last night was, what is your credit sales in Q4? Because if it's not 400 million, if it's 200 million, they could potentially lose money. That's the only thing that matters.
Question ought to be, well, how come, if it's so easy to make a car, it's so difficult to make a car, and how could Tesla possibly be successful? And how come the other automobile companies can't just crush them? Why can't they do that? And there's 2 big issues that the existing automobile companies, let's say they sell 90 million cars a year, and let's say it costs $5,000 of capital spending per car in order to make 90 million cars a year. So they're invested $450 or $500 billion in their existing facilities. That's making, probably 40% of that is making motors. So basically, when you're transferring from an internal combustion engine into a battery, so here you're Toyota, or you're General Motors, or you're Ford, and I come along and I say, hey, listen, we don't need to make those engines anymore. Let's use my battery. And you've already got these, $200 billion invested in engines. Are you going to really stop that? So that's one challenge for automobile companies. In fact, the automobile manufacturers in Germany were fined by the regulator saying, how come you're not moving faster on making electrification? The reason they're not, of course, they're going to obsolete all those investments they have. That's stranded assets. So number one, financially, it's very difficult because they have to invest as much in making electric cars as they're going to have to write off in motors. And where's that money coming from? That's one. Number two, the challenge is that the dealers distribute these cars all around the country, franchises, irrevocable. And the dealers make money not on selling metal, but on servicing the cars. So if you have all of a sudden a replacement, and that's all the distribution, and if you have all of a sudden a replacement of engine that has all the service requirements with a battery that doesn't have any, and you have the parts that are so few compared to thousands in a regular car, why should a dealer, when you call up your dealer and say, I'd like you to sell the electric cars instead of the gasoline engine cars, what are they going to do? They don't make their money that way. So they have to totally revamp the whole strategy.
Incentive system.
Yep.
Hey, Ron.
They are not making more money than they're selling in credit, and that's one time in nature. So I think the point is, you can say a lot of things you want to say about Tesla, but the reality is you're talking about a company that's valued at 1,000 times earnings, where you're seeing growth decline in Europe, growth has stalled in China, and overall they're not seeing the growth they need to sow, and they're seeing significant competition next year. Keep in mind, they just introduced new guidance where they said it's going to be tough to do 500,000 cars of deliveries this year. They're saying their capacity is 860,000 cars right now. So they're not even able to sell out their existing capacity, and they're talking about ramping additional factories. Last night they pushed out Berlin, it seems 12 months. So I think there's a lot of problems that people just aren't focused on.
Asked you if we should lighten up. I mean, you understand the question, right? It's had such a huge run.
So, there was a... I want to get to that.
And you're not selling anything?
No.
Even though?
No, in fact, I was hoping that our business would grow so that I can have more money to invest in Tesla. How's that?
To add even more to the position?
Yes.
Are you adding to the position now?
If it was up to me, I would, but in the way we're structured, if we have real estate and we have in emerging markets and we have international and we have small cap funds, they can't buy Tesla stock. So basically, so let me go to price for a second. That let me do process for a second and then price. The idea is that what we do is we invest for the long term in growth companies that are competitively advantaged with great people. That's what we do. Growth companies, competitively advantaged, invest for the long term, great people. And so it's a very simple process, except people can't do it. So if you talk about Amazon, very few people in 1999 would have bought Amazon and held it when the stock went down and then the stock went up dramatically. If they had held on, they could have done it. So basically, retail people, regular people without knowledge about it, of the understanding of business, how can you possibly hold on when you have a volatile stock? How could you hold on to Tesla stock when it goes up and down when you're a retail investor? This isn't retail. And retail people would come in and go out. But so my idea is that we don't invest in the market on, to go back in, on what's happening in the news, not on Asian flu, not on Spanish flu, not
right.
So not on impeachments, not on oil price, nothing like that. It's just strictly on fundamentals. And when you talk about holding for the long term, so two companies, Primerica and MSCI, both went public around 2008. And they both told me, both executives, both companies, they said, Ron, you enabled us to go public. I am forever indebted to you. Primerica said that. The stock was $20 at the time, spinning out. It's now $125. We bought stock at the originally, held on every single share. Next thing, MSCI. And this is, I'm getting to the, can I go? Or?
Yep, go ahead.
MSCI, Henry Fernandez, I've had him on with me in 2008. Stock was $15 a share, had him on last year. Here's an immigrant, comes from Venezuela. I don't remember which country, one of those countries, who they had to flee the country to stay alive, comes to America penniless. He comes up with the idea of MSCI, Morgan Stanley, brings it public. We invest in it, and $15 a share in 2008. It's now $300. And we have never, so he asked me to speak to his board last week, and he wanted to understand how is it possible that everyone was buying and selling his stock and they had a speed bump when they did the risk management? How was it possible, Ron, that you invested this whole time and never sold a share? And he said that what he wanted to do was have me speak to his board to have them, so I could explain to them, how did we withstand pressure to sell? How did we do that? And I think there's another triple or quadruple coming in this one.
So what's the answer, though? I mean,
we're just trying to get to the... So he said the answer was that he thought that I believed in him.
Right.
And then in addition to that, I really liked the business. And so after I did this presentation to their board, they were 20, 25 people. Then afterwards, it turned out that the former president of Fidelity Management was sitting in this meeting. And so he walks out with me to the elevator and he says, Ron, you're friends with Peter Lynch and Will Danoff. And did Will ever tell you the story about what he tells analysts that he inaugurated an initiation to Fidelity? I said, no. He said, well, first thing he does, he puts them all in a room, and then he puts a telephone with a speaker on it, and he calls his mother. His mother is in Alabama or Arkansas, wherever I think she is, and he calls her and says, Mom, what did you always, on the speaker, and all the analysts are sitting around and said, Mom, what did you always tell me when I was young? And she said, Will, I always told you that people know the price of everything, they know the value of nothing. And so basically, that's the whole idea here. That the idea is that, of course, anyone can see the price of the stock, but you can't tell me, the regular person, that this Tesla stock is going to go up 10 times or 20 times from here in the next 10 years.
Okay.